affect any of the oil majors, then prices should improve. Then US shale producers they've also scaled back. But if oil, rise too fast, they can come back. So for us, we are seeing the oil price of around 55 to 60. Yes, you can be seeing close to 70 right now, but 2018 is still very long year. So there's always a shock, but we're expecting something that's a bit better. Last year it was around 54.something% on the average. The average for 2018, we also expect it to be a little above that. But you definitely see some spike above 70 or around 70. But by the time shale producer come back, if it's too high, then you see some moderation as you go. But overall, it's positive for Nigeria because our benchmark price of oil, according to the budget, is around 45. So it's positive for revenue, it's positive for reserve, it's positive for the economy.
Let's focus a bit more on the domestic side of things, where the reason why we're seeing the capital market, the equities market growing in recent times is simply because of the investors and exporter window introduced for FX by the Central Bank of Nigeria. So with what you have projected at United Capital, do you see the FX market conundrum being resolved in 2018?
Okay, so the only problem with the FX market at the moment is the fact that we have too many portfolio investors in the economy. And another thing we are seeing is second half of the year, there's this likelihood for political crisis to, uncertainties to increase due to the election that is coming on in 2017. Okay. But the fact that oil prices is stabilizing, reserve is improving, is a plus. Now, if the tension around Q2, Q3, Q4 increases, we might see some scale back in some of these portfolio inflows, which can mount some pressure on the exchange rate. But if oil price can maintain 70% or above, then that can, to a large extent, moderate the pressure. Because for foreign investors, really, what they are really interested in is the price of oil and the effects on our external reserve. If those two variables are fine, I don't think they are as concerned about what will happen to the economy as much as all this political crisis.
Okay, so your report also talked about the monetary policy and policy easing being imminent, but not for too long. Explain that to us.
Yes, so there's this overall view that the CBN is likely going to drop MPR, the monetary policy rate, from 14% to, we are seeing 100 basis points decline maybe in Q1 to 13%, then another one to about 12% by Q2. But what we are seeing is inflation, which is the major thing that the CBN is tracking. There's a lot of risk in the horizon for inflation. Right. At about 15.8% at the moment. We are talking about wage review. We are talking about a likely deregulation of the current 145 PMS price, petrol price, right, that we have. Government might not do it, but you might continue to have this scarcity of fuel because oil marketers cannot continue to sell at 145 if their landing price is above that. Right. So that's another problem. Electricity tariff is another issue. So if inflation don't drop as fast as it should, then we can start seeing pressure on inflation rate again. Then even though the MPC might drop MPR to around 12%, they might be forced to keep it at 12% or increase it again if pressure in second half of the year increases, especially once political spending around the pre-election period start coming in.
Okay, so of course we can't talk about the monetary authorities or monetary policies without talking about the fiscal side of things. How do you see all of these helping Nigeria to shore up its drive to mobilize non-oil revenue?
Okay, so for fiscal policy, what we've seen is the fact that the fiscal authorities have been very aggressive in terms of raising non-oil revenue. They've initiated VADs. I believe you'll be speaking about that later on. Yeah, they also initiated some whistleblower policy last year, which has also helped rake in some amount of money. But we saw a lot of independent inflow and some of these things in the budget, which from what we've seen from history, it looks like some of these figures are a little bit optimistic. So we are wondering where this money is going to come from, because many of the systems and the institutions in Nigeria are still very weak. So these are some of the areas. But we think the inflow from oil, if it continues above 70, is positive for oil revenue. And now we are diversifying our borrowing from domestic to foreign, which is cheaper. Hopefully, FX will be stable, so that won't create as much pressure. So really, what Nigeria needs to work on now in terms of fiscal policy is mobilizing those non-oil revenue more, while we start getting some more accretion from oil revenue, because for continued borrowing, we don't have problem with debt to GDP, but we have problem with revenue to debt servicing. Debt servicing is gradually crowding out our capital expenditure. They are almost at par at the moment. And we need to really do something about it.
Especially now that the US Fed, the ECB, and all these
are all normalizing their policies. So these are some of the things we are seeing in terms of that.
So let's look at the effects of all of these policy actions of fiscal authorities on the markets. Let's start with the fixed income market. How much of impact are we likely to see, especially on yields? Will they moderate, and for how long?
Well, for yields, we are seeing yield is governed by expectation, because people are expecting inflation to drop, they're expecting interest rate to drop, so you don't want to wait till when it drops before you make your move. So participants are already, making their move ahead of time. So you see that from an average of 17, 18%, sometimes last year, yield has drastically dropped, significantly. So we expect that to continue until CBN drop interest rate by about 100 basis points very soon.
But how low can it go?
But how low can it go? We're expecting another 100 basis points before the end of first half of this year. Okay. So we expect that to stabilize around 12%, for this year, because that's like the long-term interest rate for Nigeria in the last 10 years. If you see what we've done from the period of Sanusi till date, 12% have been the average MPR for Nigeria. So we don't see it going below that because of all of this pressure. All
right, Wale Olusi, research analyst at United Capital, thank you so much for honoring our invitation to Capital Market. We appreciate your time. After the break, we'll find out the relationship between the markets and the federal government's tax amnesty.